I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the last week and a look forward at what might happen in the next week. And some good stuff in the middle. Well, we saw the stock market move sharply higher as calm set in after the horror of the terrorist attacks last week in Paris. Gold, well, that came down, broke some support, stabilized during the week. Oil popped early in the week on that news of the attack and then eased back throughout the week. Bond market, well, strong, despite the fact that the stock market was moving up the way it was. That might have to do something with the jawboning coming out of the Eurozone as Draghi talks about doing anything they can to stimulate inflation. Yellen comes out and preps investors for what looks like a coming rate increase in December, and an odd time of divergence in here as negative interest rates in Europe and the prospect of higher interest rates here in the U.S. give the dollar a real boost, and they want to keep the euro on the downside, of course, to try to keep their economy stimulated. And this ends up to be one of the strongest October weeks we've ever seen, and may end up to be one of the strongest October months ever, as this week we saw the Dow Jones move up, how about over 600 points? So it has been a steady, big increase in the markets throughout the week. Let's take a look now at our 60-minute chart, which takes a look at the influences in the market throughout the week. It's a interesting chart in that it shows the gray areas, which are the overnight trading, and the white areas, those little white areas, are the trading during the actual trading session. So we'll start out on Monday, and you could see Monday after that news out of Paris, that big decline right there, but then came back overnight steadily throughout the night, and then steadily throughout the day. So that's what it looked like after the attacks. And world markets before that were really little change, but the ES, you can see that range overnight, down 18 points to up about 7 points, and then rallies all day. 30 points on the upside. Defense stocks jumped, of course, on that news out of Paris. And online travel, that makes sense, that falls as people, well, afraid to get on planes, and huge cancellations in the travel area in Paris. I heard over 50%, so that was pretty significant. Oil rebounds and energy stocks do also, as it's apparent at that point that you've got to fear something out there in the Middle East, but the oil just markets could not hold as we live with a glut. Japan down 1% as they are back in recession. News comes out that Marriott is going to be bought out by Starwood. So, or sorry, the other way, Starwood, to buy Marriott. Boy, I got that confused. Take a look now at Tuesday, and you will see in here that there was another day where they looked like they were going up overnight, all that buying coming in, and then an early rally, but then they eased back pretty much throughout the night. The Eurozone, they followed the U.S. up about 7%, CPI up 0.2, and that's after falling for 2 straight months in there. Walmart, Home Depot, they come out with beats, and that helps lift the markets early on during the day, but they really couldn't hold. and they fail right at a resistance we were looking at around 265 to 268 in the S&P 500 index, but that of course did not hold them later in the week. On Wednesday, well, we had flat markets in the Eurozone. China was down 1%. There were huge raids in Paris going on as they were looking for the ringleader and other terrorists out there. China comes out with weaker data as their housing starts are down 11% here in the U.S. on what they call weather issues. But Apple gets a big bounce on Goldman Sachs' bullish comments. That lifts the NASDAQ and really helps the stocks early on during the day. S&P is up 10% as more calming of fears after the terrorist attacks. But then after the FOMC news comes out, right over there, they absolutely soar, some 30 points up on the day. Just a huge up day as the FOMC, well, cautious but ready to raise rates. LEI stronger, up 0.6%. After that big update that we had on Wednesday, the rest of the world, well, they followed through on the upside also, and the U.S. markets were mixed after that big lift. And then what news came out that they were after Abode is his name, and he ends up getting confirmed that he was killed, and that hopefully puts at least that cell to death that may possibly be able to attack anywhere else in Europe. UNH, now they come out and warn on Obamacare marketplace, and Humana also considers leaving those health exchanges. So big issues there for Obamacare, and all the HMOs are really weak. So we get this day in here of modest consolidation. Friday, the markets were stronger again overnight. There's Draghi. He's out talking about the ECB will act fast to boost inflation. German bonds. Now look at this. German bonds, 2 years, are at minus 39%, 39 hundredths of a percent. So if you give them 100,000 euro for 2 years, they're going to hold your money and then give you 99,200 back. How do you like that? You're going to lose 800 or so euro just for letting them hold your money. It shows you how just absolutely backwards things are in this world. Now here's a smart guy. Citigroup Buter comes out and he says the Fed will never reach normal. He says the next recession they're going to go to 0 to negative interest rates, and he says that this is systematic forward misguidance, and they are maximizing the degree of uncertainty. That's all comments about the Federal Reserve, and man, he has been reading my book, or the one I'm writing, simply because the Fed is just put this dark cloud over the markets. ECB, give them credit for the same thing. Japan, the same thing, as markets just, an economy just has no idea of how we're going to get any real expansion, any real growth, when no business knows whether or not they can expand in this market or not, or what their costs are going to be. So give him a lot of credit for that. So that is our 60-minute chart for the last week, and you can see the market pretty much steadily moving on the upside throughout the week. Let's take a look now at the best and worst for the week in this week of, well, pretty significant movement on the upside. There were still a lot of stocks that actually had some good moves in both directions, and surprisingly some just stocks that fell apart in this big upside move. So let's take a look at some of the best of the week first. First one we're going to look at is Abercrombie and Fitch, ANF. They're up 18% on the week. And take a look at the weekly chart in there. We were actually looking for a bottom to form in here, and you'll be able to see what our chart looks like in here. On the bottom are our cycle brackets, and whenever you see too little spikes like this, those are our timing spikes, and that's generally where we're looking for an important low to occur. And you could see time-wise, well, that pretty much comes into play as they get this big upside move, just a huge up move on Friday, and they're up some 27%. So they're up over 20% now on the week. And there is less discounting, and that's of course really important because that means they're have better merchandise management, and that's really been the issue for them, is they really blew it for a while, and now a much better pattern in here. We call this a basing cycle in ANF, where they have this big decline that you can see, and then they have a rally and correct into this timing and then get ready to move on the upside again. Well, that upside is started, and I think ANF is a buy on any pullback at all. Next one we're going to look at is SKX. This is Skechers, and they are up 13% on the week. Now you can see our two spikes right over here. We were looking for an upturn. It came about a week or two later than expected. We have this bullish engulfing pattern going on right here, and that it looks like an important bottom to us. Take a look at this daily chart and you'll see just this nightmare. We were really warning all over the place on this stock as it became just apparent that it was crazy overpriced. And here you had the engulfing pattern right there, made the top, and here you had this giant gap on the downside on earnings. It continued there, but now you have a nice bottom set in there. So we're going to look for Skechers to maybe get a little more of a pullback, but we think that this one is going to be one that you can buy as it gets a little bit of a dip also. Always when I put these two charts up, left side is my weekly, day side, right side is my daily chart. Netflix is the next one we're going to look at, NFLX. This stock of 12% on the week. Interesting on this one, analysts came out and said that they, one analyst came out and he was lowered his guidance to 142, but the stock was trading like at 110 at the time, and it has been straight up ever since. So our anticipated low in here, timing wise, was right here. You can see that this was actually the flash crash, so you can take that out of there, and then it moves up into the resistance zone right here. This has been a positive pattern we expected because of our cycle phasing, that there were 1 and 2 cycles pushing up, that it would get a rally. It gets right up strongly into that resistance zone with the patterns still pretty good, and we would say that pullback in here in Netflix, and this is going to be a buy also. You can see our supports and resistances in here for people that are our subscribers to our charts. They get this kind of information. You can see it bounced off the support right there, bounced off supports over here, and just moved up into resistance zone. That's where Netflix is right now. So a very great pattern in there. ANF looking like a bottom, SKX, Skechers looking like a bottom, Netflix moving up all timed very, very nicely, and I would say Netflix, you can buy that one on any dip. So take a look here at Walmart. Now this is the daily chart in Walmart, and I want you to see a couple things in here. First of all, this is the 89-day moving average. You can see it's been trading down below that ever since. These are the slim ribbons, and you can see this is negative momentum signals right there and right there that came in, and it gave a little positive fake right there, and then it got negative ever since there. So Walmart has just been a bad one. We have been really negative in there. They're up 7% on the week, and it's a bounce in here that probably was due to come, but you can see our pattern in here. We're going to give this credit for being much better than the rest of the group in here for retail for the week, but man, overall this is a bad pattern, and we're going to look for this one to just trade down again. So not great pattern in here in Walmart, but up 7% on the week. One more we're going to look at for the best of the week is TRIP, T-R-I-P, and this is another one that is up 8% on the week, gets back up to this resistance zone where there happens to be an island. And this is the bounce that comes after everybody was afraid after the Paris attacks that online travel was going to really get hurt, and it actually left an island. So I wanted you to see this one. Here's the island top. It gets just above that area right there. I don't think this one's going to be able to hold on the upside, and we're going to look for this one to fail also. But that is up 8% on the week in TRIP. Other stocks, favorable mentions on the upside that we want to talk about. Solar City, that's up 16%. Now, this stock has been absolutely cut in half of its value. That one lose a lot of money. I can't see that they're going to get any kind of big upside move in there to continue. FCS, that moves up 13%, is on Semiconductor, has put in a buyout bid, $2.4 billion. Norfolk and Southern and Chessie, CSX, NSC CSX, they're up 9% and 11% respectively. Canadian Pacific has come out with a cash and stock offer for NSC. That's about $95 billion. And that has lifted that group, a strong upturn in there. And Under Armour UA on buyout rumors got a pretty big pop in there. That's one that I don't really believe is going to happen, and I kind of like Under Armour better than that one. So that is the best of the week. We're going to take a look now at the worst of the week. And the first one we have to look at in here is a stock that has just absolutely been annihilated. That is SUNE in the Solar Group. Now, I have a lot of people that write me questions about the Solar Group, especially because I've been really favorable for the long term on CSIQ, that's Canadian Solar. But in this environment of very, very cheap energy, that is not exactly the environment for alternative energy. So I want you to take a look at what has happened to SUNE. This is such an interesting chart in here, as it moved up pretty consistently for like a year and a half. You can see all the way up from 14 to about 34. It puts on that bearish engulfing pattern. You can see that on the weekly chart. Now look at the cyclical patterns in here. Just amazing as it continues to track on these patterns perfectly. You see these small patterns right in here. That's the beautiful patterns that you see trading right in here. This big decline right there, and then all the way down over here. Can you imagine? From 33 bucks into the twos. Incredible. Take a look at this daily chart right here, and you will see this when the news comes out that they were by Vivant. Then there was an analyst downgrade at that point. It gaps on the downside. That's known as a kicker pattern. Slim Ribbon turns negative right there. That's at around $28. And all the way ever since, it never gave anything but these negative signals and this huge move on the downside. So SUNE, just an absolute nightmare in there. I think that we're going to get better buying opportunities for some of the solar stocks that, you know, look pretty good. For solar, maybe one of them, and CSIQ, I think another one, but not right now. Another one that we have to look at that I have loved to hate was CHK. This is Chesapeake. They're in the natural gas category. They're down 19% on the week, well overshadowed by the 43% decline that we see in Sun. And take a look here at CHK. I have really disliked this stock for a long period of time. You'll see here that this is on the list of my riskiest for the year that I put out on January 1st, so it was over here, and it has continued down. Now look at these amazing cycle patterns. As well, the low is due right over here, so stock moves down to $5 or so, and you got to wonder if it's even worth buying, but you could get a pop in here, right? $5 to $8. Who says that can't happen? So a low due in here. The stock is down 19% on the week. And just also take a look at how this important 89-day moving average came in, and the Slim Ribbon, all of it giving you such a negative read in here. You can't even see where the Slim Ribbon turned negative over here. It almost can. And here it turned negative again, gave you this big decline. 89-day moving average gives you a bearish engulfing pattern right there, and just a perfect look at how technical analysis can bring you some really, really good long-term information and that really fell apart. Another stock that I have just absolutely loved to hate. The third one that had a big break on the downside, SHLD. When this one was in the 40s, I said it was going in the 20s. Here it is right now, again on my worst list for this year, and just a horrible looking stock. I think this one goes down through next year. I think you're going to see it in the mid to low teens, and another bad looking stock. In that regard, JCPenney, which I've been really negative on, I think that stock is going down to about $2. So I think that not only are the department stores, they've been really bad, but I think those two have been some of the worst. A couple more stocks that we're going to look at for the worst of the week are Best Buy, BBY, as we look at more in this retail category that has just been basically decimated. This is a terrible pattern. Now, you're going to see a little different chart in here is because I have what we call the phasing in here. The colored phasing gives you an idea. The green zones are areas where the cycle is rallying. The yellow zone is area where it is correcting, and the red zone is when it's really bearish, when there's nested cycles coming down right over here. This is a just plain horrible pattern. I mean, it rolled over nicely, and we saw that, and now it's come down and challenged this low. With all this time to go out in February, we really expect to see Best Buy continue to move on the downside. They came out and down 9% on the week on some very weak sales outlook, so that is a bad one in there. And one more stock we'll look at really quickly that's been just decimated 1 week on top of the next is Akamai, AKAM, down 8% on the week, and this also a very negative pattern. And you can see when this turned underneath these lows in here that it was very bad and continued to point to declines all the way through January. So Akamai, AKAM, another stock that just does not look very good in there, and we would sell any rally in there. The stocks that I also want to mention in this retail group that have just been horrible, big declines in the week in Dick's, DKS, Dillard's, DDS, Urban, URBN, all misses on their earnings, all in very negative patterns. And what does that say about the consumer out there, right? When we have all of this retail that looks really bad. And a couple other stocks to mention, downgrades again by analysts in GoPro, that's down 11% on the week. And US Steel in another pattern that just looks horrible, very negative, that's down about 8% in the week. So some really bad stocks in there on a week that, well, the Dow up 600 and something points, amazing. So talk about, you know, the best and the worst of the week. Couple stocks that I'm looking at for potential upside in here. GMCR, that one got a nice boost, and I think that made an important bottom. I like that one to buy on some dips. And Under Armour, UA, I mentioned that one. I think that one is in decent shape. On the downside, man, I could name a lot of stocks that look to me like they're in areas of failure. I'm going to give you 5 right here that I think have got a pretty good chance of some downturn. Cree, C-R-E-E, IBM, Boeing, B-A, McDonald's, which is one that I have really started to dislike just based on background news in here, and I think that, you know, the people that are buying it are making a mistake here. Target is one that I really caught nicely a couple weeks ago. It had a big break, and we're going to look for that stock to potentially bounce, but I think it is a sale if you get a bounce in there. So those are my best and my worst for the week. One more thing we're going to look at is the economic calendar, earnings and economic calendar for the coming week. Of course, this week is a week that is a holiday week, so we're closed on Thursday, and the markets do close early on Friday. So there's everything that's going to happen is probably going to happen in the first 3 days of the week, or 2 days, because Wednesday actually could be a slow day also. So here is the economic and earnings calendar for this coming week. You can see very little in the way of earnings coming out. GameStop on Monday before the opening, Dollar Tree and Tiffany in that retail category coming out Tuesday before the opening. Deere could be a big mover there on Wednesday before the opening, and after the close we can see Tuesday is Hewlett Packard coming out. As far as economic events go, you know, everything in the first 3 days of the week, not a lot of market movers there. as the big news is probably going to not come again until we get into December. So just the normal stuff, and I don't think we're going to see any big economic events come out that is going to cause the markets to have any big moves. So that is our earnings and economic calendar for the week. That is the opening segment. A lot of information in there. I hope that there's something in there that you find of value, and we're going to be back in a couple of minutes, and I will bring your emails and tweets. Emails and tweets, as always, got a bunch of great ones here today, and keep them coming. I get a lot of them, but love to get your emails. First two actually are from PC. He sent such great questions that, well, I wanted to bring them both. So here is the first one. PC says, Slim, I always felt that the best way to extract the most out of the stock market is to work with what the market gives you. For example, in periods of high implied volatility, you should be selling more premium, and in low implied volatility, buying more premium. How come it seems most traders do just one or the other? Many premium traders are impotent right now. I believe you're saying that because, well, we've had a period mostly of low implied volatilities. It says, I believe in a flexible strategy. Can I be successful without being rigid, as other traders seem to be? Thanks, PC. And thank you, PC. A couple of great questions you sent me during the week. You know, I'll say it's a good observation that you made, and I'm going to take it even a step further than that. Saying that many premium sellers do not really execute the style well, and they kind of pigeonhole themselves. They miss great directional opportunities when you have an period of high implied volatility. High implied volatility means that there's a lot of movement going on. So yeah, you can take advantage of that by selling premium, but also the big moves in there give you a lot of opportunity to actually be long. Can you imagine that? They just don't generally consider that the wider swings can get them in trouble, even more trouble, when you're in a high implied volatility environment from being short options, puts or calls. And that's what I get a lot of emails from people that are struggling with that. And that's because, well, I would say too many people get caught up in what my old network teaches. They teach really that being short premium is the only way. And I think a majority of these traders that sell premium, they just do it in a few stocks and ETFs because, well, they want to be able to control it or do it in a small way, and they don't understand that that's not the way the style works. To get the math to work, you have to have a lot of positions on and make a lot of trades, and really small. They are right when they say trade small, trade often, because that's the only way that style can work. Also, what I think is not said often enough is that when you're trading that style, short premium, you really have to be not only spread out a lot, but you have to be balanced. You have to control puts and call shorts on both sides of the market, not only be one direction, because that's what blows people out. The next question, Slim, what's your experience with crutch trading? If you plan on holding on to a long position for a very long period of time, a position trade, would you ever consider selling a highly correlated underlying to hedge that position for a period instead of placing a stop loss? An example would be buying SPY, so that would be the long position that you're holding, and selling an equivalent of QQQ, which is a high correlation right now. So there's two times that I think it's okay to do that trade. One is when your analysis suggests it's time to get out of the position you're holding or to reduce the risk, and further analysis suggests that something that you want to hedge it with that has a high correlation, as you suggest, has a worse relative strength. In other words, the one you're holding appears to be stronger relative to the one that you want to hedge it with. If you do that, at that point, your original trade's over. and you have a new trade on that's a pair trade and a new basis based on that moment in time. So your first trade is gone, and you're doing it just based on the fact that one is stronger than the other. It's deliberate, and essentially you're in a new pair. You evaluate it that way, just as that trade. The old trade, gone. Second one is when there's tax consideration. Either you want to carry the position over from one year to the next, not take the profit in a particular year, that is if you don't have a mark-to-the-market election, or you've had the position for some time and you want to actually hold it until it becomes a long-term capital gain, because it's still, you haven't held it long enough, so you might hedge it at that time. If it turns out that you want to just hedge it because you don't want to take a loss, you just kind of want to hold on to a position, which is not something that you're talking about, but a lot of traders do, that is just a plain out illusion, because odds are that if your original trade comes back because you're selling one that's highly correlated, you're just going to have a loss in the one that you sold against it, in the position you sold against it. So that would just be an illusion, and I'm not in favor of doing that. So 2 times I think that it makes sense, and in this particular case, good question again. Great questions from you. Next question is on Yelp. You can see I moved the Yelp chart in there. Yelp, according to KC, has a head and shoulders bottom. And is the bottom in, he wants to know? Well, you know what I say to that? I say to that, yes, it sure looks like it. So let's take a look at the chart here. And of course, we're looking at cycle chart, weekly chart. There was a low due right here. You could see these 2 things pointing to it right at that point. That says that likely to get a rally from that point, and we did. And let's take a look at that head and shoulders that you're talking about. We spotted that one and had it marked off on the charts. And there you go, a beautiful head and shoulders pattern, and looking like it is likely to run into some resistance because, well, it made a perfect measurement there. You can see getting right up to that level, and that being the spot where the measurement is from the distance from the head to the neckline. You can see right in here. And that is the same distance from the breakout level to right over here. So that gives you an example of how you do the measurement, and yes, it made that level. It doesn't necessarily mean that that's all you're going to get. You could get more than that, but in this case, Yelp has made the move we expected, and I would say that, you know, stock is pretty attractive when you look at where it came from, 85 all the way down to 20 bucks. And so probably get a little pullback in here, but momentum in this one looks okay, and I think we're probably going to see some better prices. You also asked me about CTSH. You said you're watching for some good short trade setups, and this one you said you really like based on negative momentum and wanted to know my thoughts. Well, I got to tell you, nice work on this one, because I'm completely in agreement with it. CTSH, we're going to put that one up. On the left is the weekly chart, on the right is the daily chart, and you will see that there is a head and shoulders in there. Let's look at the weekly chart first, and you'll see this cyclical pattern rolling over. Those of you that are following my cycles know that 2 nested cycles right over there point to a low coming, and that means probably some more decline right in this area. You can see the support coming in here around 58, now trading at 65. I wouldn't be surprised, based on what we're seeing, that it trades back down below that 60 number. Here's your head and shoulders top. You can see that. An interesting pattern in here, and interesting labeling that we have. Here's the Harami, the top warning. We had a shooting star in there, and that rolls over and looks to me like nice downside breakdown. Here's the negative momentum that came in that you suggest. You can see that red arrow, and the measurement of the head and shoulders, just as I showed you in the last one, from the head to the neckline measures down to here, and that takes you down to about 61.5 based on that. Here's those lower supports right in here at about 60 and about 58. So not a great looking chart, and nice work on that one, as we have a chart that looks like it is very shortable. So good one. A tweet, Adamo writes to me on Twitter, and he says, you still looking for Facebook to run to 113? Facebook's a stock that, well, I was bullish on for a long period of time. When it was in the 70s or so, I kept saying 80s, 90s, and 100s. And it was a stock that just kept moving to the upside. Let's take a look in here. We're going to look at the weekly first and then the daily. So here's the pattern we're looking at in here, and this looks like a stock that came up and hit our projections. It got into the fib extensions. Let's get a little closer look here so you can see that. Gets up into that area of Fibonacci extensions right up over here. My target was up at the top of that near 113, and I had mentioned that. Now there's reason to believe that this 110 area might be an issue for it. Now you see I have it rolling over in here and correcting down into January of next year. Take a look here at the daily chart, and you will see that there is this big double star evening star in there, and today we have this harami that is suggesting that it is stalling, and this area of around, we'll call it 108, 110 is a problem for it. There's also a shorter term pattern in there that is getting ready to turn down right in here. So I actually think that Facebook is ready to pull down in here, and that, you know, this area 108, 110, it's come a long way, and that could very well be a problem for the stock. Next question comes from ML. It's talking about CSIQ. Boy, this solar, the whole solar group has been wild, and we've seen Sun, S-U-N-E, absolutely get annihilated, coming down under $4. Incredible. It says that CSIQ touched resistance and then broke below the 89-day moving average. So let's take a look at this chart, CSIQ. Get this right over here. CSIQ on the weekly chart is where we're going to start out, and here we go. There you go, and I want you to see the resistance area that we have in there, and this is an engulfing pattern right there on the weekly, and that is not a pretty pattern. We are looking for this stock to run into trouble if it tries to rally in there. And you're asking me what my opinion is on this stock. Well, my opinion is that 24-25 area is a problem for it. You can see that there. It's got this support zone in here that comes in around 19.5 on the downside. And you can see in here that this cycle pattern is suggestive of a corrective period out into January. So, you know, I love the valuation on this stock. It's very related to China. It's a stock that I think is going to do great next year. But right now, while we have energy under huge pressure, I think it's an issue. Take a look here, and you could see that big engulfing pattern on the daily. That is a problem for it. Here's that support at around 19.5 coming in, 19.5 to 18.25. I think it's going to get into that zone. Absolutely don't love it. You also asked me about Green Mountain Coffee Roasters. This one is really interesting because after I sent you the response in here, it was almost, you know, like I had a crystal ball or something. You asked me about it, and you asked me about actually Starbucks and Green Mountain Coffee Roasters in relation to the move down in in coffee. Coffee has had a breakdown, and so that would normally mean that, you know, because it's good input costs, lower input costs for Starbucks, it's bullish, and you wanted to know if it was a buy. And a GMCR, you said that one is really looking weak. So my response to you was that yes, Starbucks should benefit from the decline in coffee prices, and it looks like it's going to be weak for a while, but the Starbucks pattern is not great. And I'm hesitant to buy it. The response about Green Mountain Coffee Roasters is it's kind of been negative and in a world of its own, but the pattern suggested a bottom coming soon, and that I have a feeling that the negative sentiment is going to end. Well, boy, did that ever happen. Let's take a look at both of these stocks. as we look at, sorry about that, as we look at both Starbucks and Green Mountain Coffee Roaster, SBUX first, and we'll take a look here at the weekly chart. And this stock, you can see, has just been absolutely crazy. Everybody thinks they're going to get rich going into China when they don't even really drink coffee in China, do they? So the stock has done just super well. You can see the upward stair-step pattern in here on these cycle patterns, and then actually looking like it's rolling over. So you see this little pattern in here, that's suggestive of a little more decline coming, an attempted rally, and I think that one's going to fail and roll over out here into February. So this is kind of a toppy look to me. I'm not loving Starbucks. Maybe the coffee prices are priced in it already. Here you could see that it likes that 89-day moving average, and that it is kind of lost its upward momentum. You can see it's these bars turn gray as the slim ribbon does that. Here's where the positive momentum came in, and now it's giving up that positive momentum. So I think Starbucks is really toppy, and I think that we can look for rallies in there to fail. Next one we'll look at is Green Mountain Coffee Roaster, GMCR, and this one is looking to me like, well, we probably had a major bottom in this one form today. So take a look here at GMCR on the weekly chart. This pattern shows you that based on the cycle patterns, I'm going to look really closely in here. What we had looked for in here was here you could see this pattern right in here, a terrible rally, and then continues all the way down to the time frame that we were looking for a low right here. Now look what happened in here on Green Mountain Coffee Roasters. Right here it had this big up bar there. You see this, there was a harami, as they call that body inside the body 2 days ago, and then this big huge volume up bar right there. So that's a big doji. It's probably going to get frozen for a while in this area because of that, all that volume. 51.5 to 46. You see that, 46.5. We're going to look for some sideways trade in there, but then I think what's going to happen after it consolidates some is it's going to come up and take out this area near 55. So I think it's Green Mountain Coffee Roasters has an important bottom put in there. Good one. Thanks for bringing that up. DA writes me and wants to know about what my view on Win and Tesla is. He says Win could bounce off of support right now around 60, as it looks like it has. But other indicators in there are a little bit sloppy. Look like it could mean that might go lower. So he's a little confused about that. Tesla is currently moving higher, although the short-term trend looks like it's ready to move lower. So he sees two contrary moves in there to where these stocks are moving. Win supposedly getting ready to move on the upside. Tesla getting ready to move on the downside. And he says, can you help me with this one? Yeah, I can help you with that one. It's almost like you were reading my notes today, because I had notes that said exactly the same thing. Win, kind of sloppy pattern, but looks like the perfect spot for it to get a lift on the upside short term. I expect that to happen. Las Vegas Sands probably with it. Tesla, I think that one is getting ready to roll over, and I think we're going to see 200 or lower again on that stock. So thanks for all of the great questions. That is the emails and tweets for today, and we'll be back shortly with our short-term view. Before we get into the short-term view, I just wanted to make an invitation to you and tell you about our video section. We're building a very nice sized library in there as we put in many videos each month. Just in the last month, we did some amazing videos, and we've gotten some great emails in there. Of course, every Wednesday we do Futures Speak, which is about a 50-minute video, which goes through 25 different futures with very deep cycle analysis, looking at weekly charts and at the daily charts, and I know it's about our most popular segment. But besides that, in the last month, we did market sectors where we looked at the country ETFs and look at how they correlate to U.S. markets. We also looked in market sectors at 8 tech stocks that had beautiful setups for the intermediate term that in the next decline look like a great buy. In our tools for techs segments, we did a really nice video on the gold and silver ratio. We did money flow studies in there, which looked at several different money flows, comparing which ones we thought were the best to some that maybe aren't so good for the markets right now. And we looked at chart setups for swing traders, which so many people have written to us how much they have benefited from just that segment. Also on trading psychology, we looked at money versus process, in other words, taking a healthy focus on how you engage in the markets, and 7 tips to manage emotional capital. Can you imagine that? All of those videos, I just named 12 of them, that we did just in the last month, really to raise your probability of success. Educational videos and really videos that are very relevant to the markets right now. I want to invite you to become a member. Can you imagine all that? Only $27 a month if you want to come in and try it. And 3 months is $73. So how can you beat that? All of that education, all of the work that we put in for just that small amount of money. I promise you, you will never learn so much in a short period of time. So consider becoming an askSlim member. That would be level 2 to get all of our videos. And here comes our short-term view. All right, this is our short-term view of the coming week. Do this every single week, take an accounting of what I said in the last week. Just want to mention before I get into that, in last segment I talked about an answer to a question about hedging a long position with a like instrument, and that there were certain tax considerations there. Well, make sure you check with your tax professional. Don't take my word for it. All right, so let's get into this coming week. Well, last week I'm going to get about 50%. Most of what I looked for was close, but we had the euro market, we had the gold market. We were looking for small up weeks in there. They ended up with small down weeks in there. So some of the changes weren't very big, but some of the direction wasn't right. So mostly we're just about 50%, and not a great week, but not really a bad week either. Like the stock market, we were looking for an up week, right? Well, we expected it to fail in the area of around 2060 to 2067, and it failed there early in the week, but then moved up through. So we don't get credit for that one, even though we had the direction right. So most of the stuff just about half right. Let's take a look now as we move into the next week, and that first thing we're going to look at is light crude /CL. Now we're only looking at daily charts here because short-term view, I take into consideration what the intermediate patterns might be, and might say that, but overall this is really just looking at the next 4 to 7 days out there. And in this case, because, well, it's a holiday week, it's going to make it even a little bit tougher, and we're going to be looking at a little longer time frame into the following week on most of this stuff because, well, Thursday's closed, Friday is just half days. So take a look here at light crude. So what we had expected in light crude was it to chop on the downside and then turn upward. Well, you know, we got that. We expected it to be a small up week, and it's just really a tiny little down week in there. So like I say, we only get half credit for that. Let's take a look here what we're expecting in the next week. So these lows in here, you see they're all really close as it starts to move up. We're going to look for a move in here. Now this is the rolled product, so we're looking at the next month out from where we were looking at it last week, so the numbers are a little bit different. We're looking for a bounce in here. We're going to call it an up week of some minor proportion, testing resistance area of around 43 right there. to around 43.30, which is that middle of that slim ribbon right there in the resistance zone. So overall, it's a super weak pattern on the intermediate pattern. We don't expect to get much on the upside in there. So just kind of an attempted rally in here, maybe another down move, and kind of zigzag going on in here. And ultimately, this big pattern taking it and pushing it even further to the downside. So just looking for some sideways chop in here, test resistance, not be able to hold it, and pull back. Next thing we're going to look at is the gold market. /GC, and we expected in here that it was going to test resistance up in that 1190 to 1200. I'm sorry, 1090 to 1100 area, and it popped up there on the news on Monday morning and got right up to almost about 1097, and then fell off and really broke through some important support. Now you can see that morning star that formed in there, and it did it right around where this cycle bracket said that there was going to be an important low. So what we're looking for is another rally this week and kind of get up here and test this resistance zone. But there is a lot of risk after that. So we're going to call this week small change or down big. In other words, we don't think it can get up very far. But certainly if they try to rally and then roll over, there is a lot of trouble and a lot of risk here in late November and early December. So we are looking for potential of a washout on the downside as we get into this December month. And any rally in here is subject, and we think that there's a lot of risk over a couple weeks in here and then even well into December. So we're going to look for just an attempted rally to the upside and it not be able to hold with the risks high of pretty good sell-off in there. Next thing we're going to look at is the euro currency /6E. And this one has moved down steadily. It's followed this cycle pattern as expected. We steepened the way this looked a couple weeks ago because it got hit so hard. And then we had, interestingly, Mario Draghi come out and try to talk the market down. And then he, succeeded right in here. But in the next couple of days, we're expecting a low. So we're going to look for kind of a narrow week in here with maybe down early and then into late week or the following week getting a rally up in here. So we're just going to call it a minor week, not a lot of movement in there. And then setting up for a test of this resistance area up around 108 in the next couple of weeks. So pretty hard to project. You can see right in there, it looks like, because it looks like down up, that it could be a pretty narrow week kind of hanging out in this area right over here and setting up for that attempted rally in the following week. So that is the euro currency /ZN. Now, we expected it to kind of move up and roll over. Our anticipation was that it would test resistance around the area of 126.21 to 127.03. And you can see it did that. It moved up into that resistance area. And then we expected it to roll over and fail. Well, it kind of just traded sideways, so we're not going to give ourselves full credit for that one. But the risks are high in this area. We're looking for a down week of some significance. And those of you that have followed us on our Future Speak on Wednesdays for members, we talked about the 30-year getting up into an area that we considered a sell zone, and it is in there right now. So we're not going to look at that, but our members know that that's the area that we targeted for a rally and the area that we wanted to sell it. We're going to call this maybe a little more attempted rally, but basically down week in here and pretty good risk. And our target is testing this low down around, we'll call it 125.20, 125.21 on the downside. That's for the 10-year a pretty good downside move over a point. And we think we have that kind of risk in here and much bigger risk in the 30-year for the coming week. So this sets up what could be for in the next week or week and a half a pretty good size down move in there. So that is a look at light crude and the gold and the euro and the bond market. Let's talk about the stock market now. we expected the bounce that we got, and we expected it to move up into the resistance zone, which we got, and then it moved through on the upside in this really big up week for the stock market. We have this holiday week, and again, this is going to be a tough one to call because the holiday weeks tend to hold up, right? Tend not to have any big declines in there. Sometimes you get surprised, but we're moving into this Thanksgiving week that has normally a solid bias in there. So a lot to look at in here. There's lots of lines on this chart, and I want you to see how we have moved up to this resistance right now, fib confluence area. That's this big red line. Minor resistance right up there is the 78.6%. There is so many lines in there, it's hard to see. There are more fib extensions up above in here. The fact that we have gotten up that high, and I made a point that if it got there, it meant that it would probably try to test higher levels. That says that we're probably going to spend the next several days chopping around in here in this area of getting stuck through there and the minor support which comes right in over here. So what are those numbers? Let's take a closer look and you'll be able to see, and that puts us at for this week resistance right up around we'll call it a range on the upside of right over here, or let's say 2100, 2096 to 2100 on the upside, which is basically where we got to on Friday on that intraday point right there. And then on the downside, support right over here around 2067. So because it's a holiday week, we're going to look for it to be kind of stuck in here in this range right here. If anything, we think it could pop up through there once and then roll over and get into this period where we think there is more risk. Now, the week after that is a lot more risk, and it could get well underneath this zone over here. So what we're looking for is the stock market to kind of just chop around this week in this narrow range. We'll call it 2067 to 2100 in the S&P 500 with a pop, possibly a pop through and then a failure, and then the week after that we get into a much riskier period where there could be pretty good downside. So that's what we're looking for in the short term. It gets a little hard when we have these holiday days and the days that are closed to try to pinpoint some of this, and it gets pushed out into the next week. Last thing we're going to look at is the VIX, VIX. And that has, last week we were basically looking for it to be another sloppy week to the downside in the VIX. And that is basically what we got. Take a look here at this VIX pattern. That's the CBOE Market Volatility Index. And you can see here that this sloppy week we were looking for is what we got. So we just said maybe a few more days of fooling around in here, and that's what you see here. And then the following week, big downside risk for the stock market. That's big upside risk for the volatility index, VIX. So that kind of is in line with our thoughts that we'll kind of maybe not have big moves in the next week, but the week after that is where there's a pretty good downside risk in the stock market. Heaven forbid there should be any more attacks out there from these terrorists, and let's hope that our world takes care of them. That's what I'm hoping for. Anyway, that is it for Market Week. I hope you have found the information in there valuable, and I will see you, of course, next week. I'm wishing you a very, very nice, healthy, and happy holiday week, Thanksgiving, and best to you and all of your families. Come and see me right here next week. That wraps us up, and I will see you then. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show.